Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well today, and if you're new here, every Saturday we break down the latest news and the hottest topics in the world of technology and cryptocurrency over a cup of delicious coffee. That being said, in today's episode, I'm talking about the Cardano smart contracts launch date, a crypto market update, Elrond Maiar Exchange, our usual 404 Logic Not Found segment, and more, so make sure you stick around for all the updates. And if you like crypto, please do subscribe to the channel and hit the bell notification button, or follow the podcast on your platform of choice so you can get a heads up whenever I post new episodes of Crypto Over Coffee every single weekend. Now, just a friendly reminder, please be aware of scammers that are in the comments that are posing as me and other crypto YouTubers. I do not have a WhatsApp. I'm not going to ask you to contact me for literally any reason other than for the giveaway, which I'm about to announce here. If the comment does not have the name highlighted like you see on the screen, it is not me and you can report them. So please be safe out there, folks. Now, the giveaway side of things, in partnership with the folks at Keystone, I give away a Keystone tablet steel seed phrase backup device in every episode by picking a random comment from the video, and then one Keystone hardware wallet per month for one grand prize winner. Just for transparency, the product is only available in select regions, so if you win and you're from an unsupported region, I'll just send you some Bitcoin instead. Now, the winner of last week's giveaway for the Keystone is here on the screen, and so big congratulations to you, and of course I will be in touch for you to claim your prize. Now, if we kick things off here, let's go ahead and dive into the crypto market update. This weekend got off to an absolutely amazing start, with Friday afternoon bringing some serious price movement to the positive side of things for Bitcoin, for altcoins, and Ether actually to follow. However, the leader of the pack was actually ADA, with Cardano smart contracts launch date being announced, and that drove the price up over $2 per ADA. More on that in just a moment here. But it's great to see crypto gaining steam again after months of sell walls and selling pressure and just poor, terrible negative sentiment that just couldn't be broken through. And we were really at the bottom of the barrel there for a while. For me, I'm shocked that this is happening in the same time scale as all this uncertainty around regulation in the UK and the US, which are major markets for cryptocurrency. But it just shows the community, the strength, the passion that's there for the space right now. This isn't 2017, folks, on brittle retail investment. We hit a $2 trillion market cap. So we're moving on up in terms of maturity and strength overall in the markets, but there is yet a long way to go. I love the growth. I love what I'm seeing in the space, and let's see what happens in the future. Speaking of growth, like I mentioned before, Cardano's price shot up from its sticking point in the $1.40, $1.50 range on the back of new investor fervor in response to the announcement of the long-awaited smart contracts launch on mainnet by way of the Alonzo hard fork, which is coming soon. This is going to be the start of an absolutely monumental period of growth for Cardano, where years of planning and building culminate in the launch of quite a few early-stage projects like Liquid Finance, for example, and a whole slew of other projects that we haven't even seen yet will then be able to start building in this ecosystem. The target date for the launch of mainnet smart contracts with the Haskell-based Plutus scripting language is targeted for September 12th, give or take, which is an estimate, by the way, so don't go totally nuts if it slips a week, or heck, if it even comes early. Not saying it will, but just saying. Over the last several weeks, the Cardano community has been testing smart contract functionality in testnets, both closed and public, in order to make the final adjustments needed before wide, generally available launch. And tests have been hitting the mark for things to go live as planned, which is definitely a good thing to see. When that happens, ancillary tools and technologies like Nami Wallet, for example, which is like one of the MetaMask equivalents for Cardano, is going to be a huge asset for those users who want to start interacting with the first decentralized applications, particularly DeFi, on day one of mainnet launch. Wallets are going to be critical. Furthermore, because Cardano is built on a native multi-asset ledger, NFTs and fungible tokens have been living on mainnet for a while now, so the token economies are already maturing before the launch of smart contracts, which should grease the skids further at launch, if you will, in terms of utility being enabled by on-chain execution. So we're building this stuff in layers. I would expect NFT marketplaces to crop up fairly quickly, for example, because that's been done in escrows off-chain and will soon be able to be done on-chain. The UTXO, or unspent transaction output base layer of Cardano, is different than the account-based ledger of something like Ethereum, So it will be very interesting to see how the mechanics of smart contracts compare on mainnet. Now, all of this is, of course, very exciting for folks who have been loyal to Cardano for so long. And the truth is, Cardano's greatest asset is its community, not its tech or its formally verified approach. The community is what makes launches like this a success. And it's what will draw developers to the platform to build things. Engaged users draws developers. Now, Cardano gets bashed quite a bit amongst other communities because it hasn't launched smart contracts yet. And I can already see the shifting of the narrative to, oh, well, it's easy to say how great it will be before it launches, and then it's going to be underwhelming. Now, to me, it's just one excuse after another, and those excuses are running out in terms of what you can complain about with Cardano. The time has come for Cardano to take its seat at the table to show what it can do. Before smart contracts, you have ADA sitting at around $2 a piece. With a rich DeFi ecosystem, NFT marketplaces, and the like, will that catapult ADA to $5 or more? It's possible, folks. It really is. So we'll have to wait and see. But man, I'm stoked to see this come to fruition. It's been a long time coming, and the next steps are going to be the hardest. It's going to be about getting user engagement on dApps. It's going to be building new experiences with these smart contract tools. It's going to be fixing the inevitable bugs and best practices need to be found in this largely and new and very complex paradigm that Cardano's smart contract environment is delivering. It's not going to be an easy road. There are going to be bumps along the way, but it's going to be one with immense growth. Oh, and one final thing. If you are a Cardano ADA holder looking to delegate to a small stake pool to earn rewards and grow your ADA stack, please do consider delegating to my stake pool with the ticker symbol H4SH. I've been a part of this community for a very long time, since the beginning, and I am thankful for every single ADA that is delegated to my pool. If you want a guide for how to do this, I made one, which I will link down below if you are interested. Quick coffee break. Thank you, folks. In other news, Elrond fans will be very happy to know that the wait is finally over and the Maiar Exchange, the marquee DeFi platform built by the team, is coming to Elrond. And it's going to be launched very soon, but first, this testnet, a public testnet, has been launched, already ready to go. The Maiar Exchange is going to let users perform the usual exchange and swap between tokens using a liquidity pool mechanism, not unlike Uniswap, for example. But it's also going to let users who hold the liquidity pool tokens to use those as collateral for loans and other things, which opens up a whole new layer of interesting trading plays for those in DeFi. So that'll be something to watch. But right now, like I said, if you are an Elrond eGLD holder, particularly a Maiar wallet user, you should go over to devnet-wallet.elrond.com and authenticate with your Maiar wallet to request some testnet eGLD, and then head over to the testnet version of Maiar Exchange and start testing at devnet.maiar.exchange. The more people who test and find bugs or performance issues that might arise, the easier it's going to be for the Elrond team to launch this thing into mainnet, having adequately validated and tested it. So please do go check it out, report any bugs that you find. For mainnet launch, there is no definitive date yet for release, but I would venture to guess myself that this will end up being close to the mid-end September timeframe. And users who test on testnet will soon have the ability to participate in the phase 2 of this testnet, which is called Battle of the Yields, which is a yield earning competition that will come with incentives for testers. So you'll actually get something in return for your testing there. And that will likely be in the native MEX token, which is the fee-bearing and governance token that will be launching along with Maiar Exchange. And it's going to be a very, very high-octane release with a lot of excitement around it. So I personally can't wait to see and use the very first DEX on Elrond, and excited for what this creates in terms of a base layer for DeFi. Now, one question that I get asked a ton, and I have been getting asked a ton this week, is to talk more about the PolyNetwork hack this week that ended up ensnaring $600 million worth of BSC, ETH, Matic, and other cryptocurrencies in the largest ever hack of a smart contract-based DeFi platform ever. Now, for context, PolyNetwork is effectively a bridge that establishes interoperability between the few aforementioned chains and more. The PolyNetwork itself allows for cross-chain decentralized exchanges and more to thrive. Effectively, let's call it what it is. It is a bridge protocol. And I've said it for months now that bridge exploits are going to be the next big thing for crypto hackers. It is only natural that the weak points are intermediate bridges where the security guarantees are more or less reliant on completely airtight smart contracts, which is a paradox in and of itself. Lots of exploits can be found. Anyways, I digress. Polymarket smart contracts were exploited to divert funds from several of the bridge's input blockchains to an address in the hacker's control by effectively tricking the contracts into believing that the hacker had permissions to crack open those vaults that hold the assets on each origin blockchain and send it over. More specifically, it seems like the hacker was able to populate a list of public keys that governs who is allowed to unlock vaults that hold assets on Ethereum, Binance Smart Chain, etc., whilst being moved from one chain to another. This basically meant that once the hacker had stacked this list to match their private key, or private keys plural, the vaults with the locked assets opened as if they were meant to do so all along. It's truly a brilliant hack, and I have to credit Kelvin Fichter on Twitter for the analysis here. It was a great platform from which I could dig deeply into what happened and really understand what went on behind the scenes. In essence, when assets move from one chain to another on a bridge, assets on the origin chain get locked in a vault, and then the equal value of coins gets credited to that same user on the destination chain. So you lock it up on one end and you release on the other end. So there are basically vaults on either side that hold a huge amount of value in native coins, which the hacker was able to trick into believing that they were the valid custodian who could unlock and withdraw assets. Now, for whatever reason, the hacker wrote up a whole paper on motivations and stories behind the hack and has now returned most, if not all, of the funds, making for one hell of a story with a kind of happy ending. Kinda. Lesson learned, folks. A lesson that could have been a much more expensive lesson in the smart contract security realm. PolyNetwork is very lucky, and now we know another thing that we need to watch for in best practices building these smart contracts. All right. It's been a while since I talked about this project, but it's been one of my favorites and candidly one of my best picks from 2020 going into 2021 in terms of beating the odds and growing like crazy. And that project is Chiliz. Chiliz is a blockchain network that specializes in media and entertainment, fan engagement, gamified experiences, payments, and more. And at the center of all of this is the Socios platform, where major football clubs around the world have built a massive fan token ecosystem to deepen their connection with their fans. By the way, this is a hill that I will defend to the end. Football is the proper term, not soccer. Anyways, with fungible fan tokens, clubs like Paris Saint-Germain or Juventus have built up huge communities of fans who hold tokens that entitle them to not only an investment vehicle, speculative investment, but also to votes for governance functions and exclusive fan experiences that are set for token holders. It is brilliant. And with Lionel Messi, one of, if not the best footballers in the entire world, just signing for Paris Saint-Germain, the fan token exploded in value. And it was reported that Messi is getting paid, or at least somehow being incentivized in that native PSG token, which is wild if that's true. The possibilities are endless here. I mean, you have fans buying digital collectibles related to their team as NFTs. You have fans investing in fan tokens to get voting power on decision making, like what kit they'll wear during preseason, for example. You have gamification options from the mobile app. It's the ultimate fan engagement platform. And what Chiliz has built in football abroad will slowly and then quickly take over in other regions with other sports. For example, in the US with baseball, basketball, and the oblong-laced football league, the NFL. I'm a huge supporter of Chiliz, and I think their strategy for harnessing people's love for their sports club and empowering them to be more engaged with that club that they love is a winning strategy without a doubt. So really, really excited about Chiliz. Now, ladies and gentlemen, it is time for 404 Logic Not Found. And for those of you who are as of yet uninitiated in this little firecracker of a segment, I highlight notable tech-related fails or otherwise stupid moves in the world that need to get some attention. And speaking of attention, if you want to help this episode of Crypto Over Coffee get some attention from the algorithm robots, please do hit that like button, get subscribed to the channel, or follow the podcast because it tells the robots that run this whole show that you're enjoying the content and others might also enjoy it as well. So thank you so much for that in advance. Let's get a quick coffee break in here. One sec. Today's absence of logic centers around a phenomenon that is absolutely ubiquitous in crypto, but not just crypto, but basically everywhere amongst humanity. People love to talk negatively about things that they simply do not even have a cursory understanding of, be it politicians opining on technology that they haven't the faintest grasp of, or financial analysts bashing a company that sells a product that they have no idea about. And in crypto, you have communities and community leaders bashing other projects that they do not themselves understand. To me, it is the lowest form of rhetoric. I mean, let's take an example. There's an entire population of people who endlessly attack Cardano for one reason or another, but it is evident that no one doing so, or not no one, but very few people have really that much of a clue what makes Cardano different from other layer 1 blockchains. Not to mention my curiosity as to why folks attack things that they consistently assert are not a threat at all, but that's neither here nor there. Now, I'm not saying Cardano does not warrant any criticism or that it's perfect. That's far from the truth. There is always good and bad, and there are warranted criticisms for every blockchain project. However, someone who says, what makes Cardano special or different from the rest of the empty promise chains who promise high throughput smart contract platforms, clearly don't know much about Cardano at all. The smart contract execution environment is widely different in structure from pretty much everything else that's out there. It's composed completely differently. The base layer supports native assets, so tokenization occurs outside of smart contracts, which is also very different. It's a UTXO-based chain, not an account-based chain. Cardano is very different underneath the covers, and that said, someone who makes a nuanced argument like, hey, I think that the complexity of the smart contracts that interact with the UTXO layer for X, Y, and Z reason are going to struggle, and that's why I'm curious. I don't think Cardano is going to do great. I applaud that argument because it shows an understanding of the target of the criticism. Let's generalize this really quickly so that all the Cardano haters can grasp my point. I guarantee you that whatever crypto or blockchain project that you like, there's a community of people who attack it with empty, hollow arguments that completely ignore what you believe makes it special. Do you fight against that? Do you accept that? The answer is likely no, you don't accept it, and yes, you do fight it. For example, people say, oh, Polkadot sucks because Cosmos is already doing interoperability and it's launched on mainnet. That's a crappy argument because the two projects could not be more different underneath the initial word of interoperability. If you're going to attack something, if you're going to bash something, you darn well better understand that thing really, really well, because surface level attacks will only work for so long. The world depends on healthy disagreements and respectful, fact-based discourse, but that is diluted and polluted by surface level, uninformed bickering that can only be classified as a 404. Logic not found. You know, I'm doing another one. On the fly, I'm adding a bonus 404 logic not found here because this one I just can't let pass. But anyways, Francis Coppola, a writer and speaker on the topics of banking, finance, and economics, recently went off on a whole argument with Twitter users about how blockchain transactions work. And it was one of the most confusing, off-kilter conversations I've ever read. I didn't even think it was real. And I bring this up not to publicly torment Francis. I hold zero personal ill will towards this person, and I do not support personal abuse that she is receiving because of this. So please just don't bully people, okay? Effectively, in these tweets, Coppola was asserting that crypto transactions really aren't that great because the receiver has to be online to receive the payment. So markets aren't really 24/7. What are you really getting? And then because of that, hardware wallets aren't really effective because if you don't leave it plugged in to receive the funds, it's now not any better than a hot exchange wallet. I mean, what? Relevant to the first 404 logic not found today, Coppola is showing stubborn conviction in what seems to be a complete lack of understanding about how transactions of cryptocurrency on a blockchain actually work. First of all, the receiver of a transaction does not have to be online for a transaction to complete. If I send you Bitcoin right now, whether your wallet is connected to your computer or not, whether your computer is on or not, whether your phone is on or not, the Bitcoin is going to change ownership from my public address to yours by way of my private key signature, making you the sole owner of that Bitcoin with your spending key. Blockchains do not care if you're logged in. They process the transaction and finalize it regardless. Secondly, hardware wallets do not actually store your assets, so they do not actually have to be plugged into your computer to receive a transaction. Hardware wallets simply store the cryptographic keys that let you spend your assets. That is it. Your coins live on the blockchain, not your wallet. It's not like a vault full of gold. It's instead like the keys to that vault. So you can authorize the transfer of assets from one vault to another. I mean, I don't even mind someone like Coppola not understanding this stuff. That's totally normal. That's to be expected. This stuff is new. There are a ton of people in crypto who don't yet understand this stuff, and that is also okay. The issue I have is how stubbornly and rudely that she went about arguing about this when she wasn't really coming from a place of correctness. And as I said before, do not bully Francis Coppola for this. I'm using this to make a point about people arguing about things they don't understand, not to elicit attacks on somebody else. I will reiterate now, the prerequisite to arguing for or against something is to fully understand that thing, or at least understand the facets of that thing which you are debating. Otherwise, you are cruising for a 404 logic not found. Read, learn, grow, and then, and only then, should you be publicly or privately fighting with others or debating with others on that thing. 404 logic not found. All right, folks, I want to give a shout out to the sponsor of Crypto Over Coffee, Ledn. Ledn is one of the best yield earning platforms for holders of Bitcoin and USDC. And of course, to take loans against your crypto as collateral if you should need it. That's often a strategy people use to not have to sell crypto. With Ledn, I'm stacking up interest on the crypto that I have on the sidelines from profit taking, and it's ready to redeploy into the markets whenever I need it. So if you haven't already, please do check out Ledn using my link in the description below. And I thank you for that in advance, and a big thank you to Ledn for sponsoring the show. All right, folks, let's do some community Q&A. I always answer questions from folks who watch the show. Thank you. And I've got some questions from last week's episode that I'm going to answer. But I want to remind you that if you have a question that you want answered, leave them in the comments down below or tweet me at Hashoshi4 if you're watching somewhere else or listening somewhere else. All right, let's dive into the questions. First question of the day is from Vanessa at Technology Poet on Twitter. Thank you for your question. Love to learn more about Solana centralization concerns. I hear amazing things about Solana, but the one but that I hear is always around being too centralized. Curious why and if there are plans to make it more decentralized. This is a great question. So much like many other blockchain protocols that start out, or cryptocurrencies that start out, there's a definitive roadmap for delivering features over time. And in order to deliver functionalities and really get a network off the ground, there's always some sort of centralizing force at the beginning, in a foundation, in a group, in the developers that push this out, particularly with a layer one blockchain, right? Maybe not in a DeFi protocol because you're just building on top of an existing blockchain, right? And these are all general rules of thumb. They're meant to be broken. It's not 100% true all the time. But my main point is that for Solana specifically, there was centralization concerns, and there still are, related to how involved the foundation is in maintaining the network, in the process of setting up node infrastructure and getting things together. Basically, there's concerns there. There's also concerns about, okay, if it requires extremely heavy compute resources to run, how decentralized can it be? Because I can't be a node owner or a node runner if I'm just simply an average person, because it requires a lot of resources to build. There's one concern. The other concern is some of the functionality that's not all the way there yet. One of the things that's been discussed a whole ton, like ad nauseum, is slashing, the process of penalizing malicious validators or malicious nodes in the network during the process of validation, right, of consensus. It's this process right now that is not fully automated. There's still involvement from the foundation in this, and there's still this close coupling between the operations of the network and the foundation. And you've seen this in other networks too, like Cardano, which just recently kind of broke away when stake pools became 100% community run, if you will. So over time, these things will change, because over time, the foundation will be able to separate itself more from the node operators and separate itself completely from the consensus process and really just let the network run all on its own, separate. But Solana is not all the way complete yet in terms of a lot of the functionality that they wanted to do. There's a lot that's been done. There's a lot that's been completed. They've accomplished a ton, and there are a ton of users and people who love Solana. That's a success, but these things take time. So what I would say is you want to watch to see those trends starting to unfold. It will take time, but I have a feeling that the Solana core team and foundation will start to split away more and more from the protocol. So that's what I would be looking for. To me, it's all about your risk versus reward. I think Solana is still a fantastic play. I think it's a fantastic project, but it's really up to you whether that centralization concern is something that you think is going to be long-term or short-term. Anyways, thank you. Second question is from Kevron Creates. This is a basics question, and I love it. Would you please explain what a node is? I'm very confused at the terminology. So this is one of those words that gets thrown around in this space all the darn time. And a lot of people have no clue what it is. A node is very simple, and a lot of times it might be used interchangeably in a bunch of different ways, but at a very base level, this is what it means. A blockchain, really, a blockchain network on which cryptocurrency might be built, on top of which other things might be built, it is effectively a protocol that is established in a piece of software. So if I'm running an Ethereum node, I'm running an Ethereum piece of software. I'm running software that understands the protocol rules, how data is structured, how information moves amongst the protocol, how I peer with other people who are running the same software. And so what a node really is anyone who's running a piece of hardware, so a computer, like a server, for example, that runs this software, which you could also call a client if you're talking about it in technology terms. So what a node is anyone who is running a piece of hardware that then subsequently runs the software for a given blockchain. That software helps you connect to other people running the same software to build this decentralized distributed network. And that's really what a node is. A node is just one small dot in this really large, interconnected, decentralized, distributed network of different nodes, all running the same software, agreeing on the same protocol, participating in the same network. So you're basically a node in a big graph of people, or a node in a big network of people. That's kind of where the term comes from. It's a computing term or a tech term that's applied here because it's actually kind of true to what the definition is, but very simplest sense, you're running a piece of software that is the same as the other software people are running for this particular blockchain protocol. You become a node in the network. This is generalized. There's more nuance to it, but that's the general idea. So hopefully that answers your question. Thank you, Kevron. And the final question is from Johann Weiss, which is Dr. Weiss DVM on Twitter. Filing crypto taxes. I think it's a topic that's often overlooked. It would be great to get your perspective. So I've talked about this a little bit on the channel before. I've actually had some guests on to talk about this. Crypto taxes are a divisive one. There are a lot of people who are like, oh, well, taxes are illegal, so I'm not paying them. Well, that's your own thing to do, and that's a pretty stupid thing to do. Anyways, we're going to step away from that topic. If you are a person who wants to do what you are supposed to do and you are going to pay your taxes, it's difficult to do in crypto because it's very confusing. The rules are not totally clear. It's a lot to do on your own. So originally I was doing this on Excel. I was calculating everything myself. By the time we got past, I think 2016 and 2017, when there were just more cryptocurrencies and I was doing more than just had Bitcoin and had Ether and had Litecoin, became a lot more complex. So I started using softwares and I explored a bunch of different crypto tax softwares. I found two that I think are absolutely the best. The first one is cointracker.io. I've had Sheehan, one of the main CPAs over there, on the show before to talk about crypto taxes. Their platform is fantastic. It automates a ton of stuff, and it also doubles as a really cool portfolio tracker, helping you find opportunities for tax loss harvesting, for tracking your portfolio across the board, seeing how it's performing. And it gives you all the reports that you need sort of built in. And if you're not in the US, it's still a great tool because it still does a lot of the work for you. You just distribute the reports over to your accountant or whoever does your taxes. Easy peasy. The other one is zenledger.io. They're fantastic as well. I know the founder and I know the COO. Great people, great service, very similar to cointracker.io. It automates the whole thing for you, generates reports, makes the whole thing very easy. And both of them are not very expensive for what you get. Taxes are one of the most stressful things in the world because it's very confusing. So having a tool that will help do it for you is indispensable in my book. So I spend the money every single year to get these services, and I would recommend heavily that you do so as well. I will leave a link down in the description below if you're interested in checking them out. Note, there'll be referral links because I know both of the teams. That means I get a kickback. If you don't want to use that link, just use the base link and don't copy the referral part. I don't mind. Thank you so much for asking this question. think it's a fantastic question. That's going to do it for the Q&A for the day, folks. Thank you so much for watching Crypto Over Coffee. If you have a sec to stick around, please do check out my top 3 VPN picks video, which is an indispensable base layer tool for you in the security and privacy realm as you get started trading crypto, browsing the web, so on and so forth. I'll leave that video up here if you're interested. And as always, I hope you and your family have a wonderful week and weekend ahead. And until next time, cheers.